Welcome to the FinGlam Finance channel. In this video, we will be reading and discussing some articles that we found very interesting. Feel free to leave a comment. Let's start reading the first article. BTC traders remain optimistic despite the sideways trading of BTC price. A significant options open interest expiry looms, but Bitcoin's attempt to reach $31,000 on June 29 fell short. Traders eagerly await a bullish breakthrough. Data from Cointelegraph Markets Pro and TradingView reveals that BTC price has been confined within a narrow trading range. Currently stuck between $30,000 and $31,000, BTC USD lacks the momentum to sustain the previous week's upward trend or reverse its course. Nevertheless, market participants are increasingly hopeful that higher resistance levels will turn into support. A well-known trader named Gel pointed out on Twitter that Bitcoin's 2020 pattern is still in play, suggesting a repeat of the late 2020 breakout. Another respected analyst, Rekt Capital, identified promising signals on monthly timeframes leading up to the June 30th monthly candle close. Rekt Capital commented on a chart, highlighting that BTC is positioning itself for a monthly close above a resistance level that had previously rejected price movements for the past 3 months. Reacting to this observation, CryptoCon expressed that BTC USD seems poised to surge into the resistance zone. Michael van de Papa, founder and CEO of trading firm 8, added, "Bitcoin looks good, but altcoins are moving in tandem too." As we await key macroeconomic data releases for the week, all eyes are on Jerome Powell, the chair of the United States Federal Reserve, who will provide a second day of commentary on economic policy. The release date of June 30th is crucial. The market anticipates the personal consumption expenditures (PCE) figures, which are Powell's preferred tool for measuring inflation. These figures are expected to drive volatility in risk assets. In addition to the macroeconomic factors, the market is buzzing about the options open interest expiry on June 30th, which amounts to a staggering $4.7 billion. Financial commentator TED Talks Macro suggests that crypto market movement may be limited until the expiry. This was the text of the article, and now we will be commenting on it. Bitcoin traders are staying optimistic despite the sideways trading of BTC price. The recent attempt to reach $31,000 didn't quite pan out, but traders are eagerly waiting for the bulls to succeed. The data shows that BTC price has been trading within a narrow range, struggling to break free. It's interesting to note that there is a growing belief among market participants that higher resistance levels might eventually turn into support. Some traders are even drawing parallels to Bitcoin's 2020 breakout, suggesting a potential upward trend ahead. The charts and analyses shared by popular traders and analysts add to the excitement, highlighting the positive signs and the possibility of BTC positioning itself for a breakthrough. Not only is Bitcoin showing promise, but altcoins are also moving in tandem, which further adds to the overall market sentiment. The upcoming macroeconomic data releases, particularly the personal consumption expenditures (PCE) figures, are anticipated to be significant catalysts for volatility in the market. It's clear that investors are closely following Jerome Powell's commentary on economic policy, as it will greatly impact the market direction. Moreover, the options open interest expiry on June 30th is a major talking point, with a staggering $4.7 billion at stake. This factor could potentially limit crypto market movement until the expiry date. Overall, the article presents a comprehensive overview of the current state of Bitcoin trading and the factors influencing its future trajectory. The cryptocurrency market is always full of surprises, and it's exciting to see how things unfold in the coming days. As a viewer, I'm eager to witness whether BTC can break free from its current range and embark on a new upward trend. The crypto world never ceases to amaze us, and it's a thrilling time to be part of it. Now we will read and comment on another interesting article. The motion to dismiss asserts that, even if all the allegations in the lawsuit are true, the plaintiff does not have a valid legal claim. In the ongoing legal dispute between Coinbase and the United States Securities and Exchange Commission, the American Cryptocurrency Exchange has filed a motion seeking the dismissal of the SEC complaint. In a legal document submitted on Thursday, June 29, to the U.S. District Court for the Southern District of New York, Coinbase expressed concerns regarding the SEC's interpretation of securities laws, suggesting that the agency may be exceeding its legal authority. This action highlights Coinbase's determination to challenge the SEC's lawsuit. The motion to dismiss argues that, even if all the allegations in the lawsuit are accurate, the plaintiff lacks a valid legal claim. Coinbase's legal team stated in the filing, even if the SEC were correct in asserting that the assets and services it identifies fall under its existing regulatory authority, this legal action must be dismissed based on independent grounds, as it violates Coinbase's due process rights and represents an extraordinary abuse of the legal process. The SEC lawsuit claimed that Coinbase facilitated unregistered trading of 12 digital tokens that were classified as securities. However, the company has disputed this allegation and contended that the SEC is applying securities laws to specific digital tokens in a manner that deviates significantly from established legal frameworks. Paul Grewal, Coinbase's chief legal officer, tweeted on June 29, stating that the SEC's claims far exceed existing law and, therefore, should be dismissed. The SEC defines securities to include investment contracts, which the Supreme Court has interpreted through the Howey test to encompass transactions where individuals invest money in a shared enterprise and expect profits primarily from the efforts of others. The SEC's lawsuit identified 12 cryptocurrencies as securities, including Solana, Cardano, Polygon, The Sandbox, Flow, Internet Computer, Near, and Dash. Furthermore, Coinbase's legal representatives argued that in 2021, the SEC deemed Coinbase's registration statement effective, allowing the company to sell its shares to investors during its initial public offering. This approval followed an extensive review process spanning several months, involving detailed discussions with Coinbase. Consequently, Coinbase was able to facilitate trading of over 240 tokens on its spot exchange, including 6 of the 12 tokens currently subject to dispute. This was the text of the article, and now we will be commenting on it. The motion to dismiss presents a strong argument against the plaintiff's legal claim, highlighting Coinbase's determination to challenge the SEC's lawsuit. It raises concerns about the SEC's interpretation of securities laws, suggesting that the agency might be overstepping its legal authority. Coinbase's legal team asserts that the lawsuit violates the company's due process rights and constitutes an abuse of the legal process. The SEC's allegation that Coinbase facilitated unregistered trading in 12 digital tokens is fiercely contested by the company. Coinbase argues that the SEC is applying securities laws in ways that deviate significantly from established legal frameworks. The company's lawyers point out that the SEC's definition of security includes investment contracts, but Coinbase disagrees with how the agency is applying this definition to certain digital tokens. Moreover, Coinbase's legal representatives highlight the fact that the SEC had previously approved Coinbase's registration statement, allowing the company to go public and sell shares to investors. This approval followed a thorough review process and extensive discussions with Coinbase. It is emphasized that this endorsement by the SEC allowed Coinbase to trade a wide range of tokens, including some of the very tokens currently under dispute. Overall, Coinbase's motion to dismiss and arguments against the SEC's claims demonstrate their commitment to challenging the lawsuit and asserting their position. The outcome of this legal battle will have significant implications for the cryptocurrency industry and the regulatory authority of the SEC. We are excited to share this information with you and create a community dedicated to financial growth. Let us know your thoughts in the comments as we continue to explore the vast world of finance together. Subscribe to our channel to stay informed and feel free to share and comment on all our videos. Thank you for your support. Attention! The information provided in this video does not constitute financial advice and is not intended to provide any form of financial guidance. The opinions expressed in this video are personal and may differ from those of financial experts. Any decision you make regarding investments will be your own decision. We do not intend to influence your decisions in any way. If you decide to undertake any investments, we recommend consulting professionals in the field. Before risking your financial capital, conduct your own research. Financial markets can be highly volatile, so if you choose to invest, do so with caution. It is important to be aware that financial transactions are often risky and can result in the loss of your entire invested capital. Never invest more than you can afford to lose. Past performance is not indicative of future results. Financial knowledge is essential. Be aware of your goals and abilities before investing. Conduct thorough research and verify sources before making financial decisions based on this video.